Okay, so it's time for another currency update. One of the big trades, or one of the two largest trades we've had over the last 2 years or so, has been shorting the Japanese yen and shorting the Turkish lira. And I want to break down this immense trade that we've had. Both been in unremarkable downtrends against the US dollar primarily. And I'm going to talk about the run that we've had. When you look at the Turkish lira's performance, while the yen sits at its lowest level in over 30 years, the lira is at its lowest level on record. And it's slipped by more than about 1,700% from its 2012 lows, which is really when it began its decline. There's a few similarities between the currency, but I really want to talk about dollar Turkish lira. It's an exotic currency pair. It's rarely traded by retail traders, which is what we like. It's far less speculative than the major pairs, which seem to just go sideways. So let's actually break down dollar lira, the trade that I've had. I mean, even if you go back to 2020, your dollar was buying about 10 lira. And now we're at 28 lira. It's got pretty insane. It's gone beyond where a lot of these so-called analysts were anticipating the move to go. And if you look at some of the emerging market credit conditions coming out of Turkey, and the banking sector deposits in dollars are still taking a big hit. You've got lira deposits on the up, which people are obviously losing real purchasing power. And to really understand this move, you need to go back to here, which is when the rally really began and the lira really started to depreciate. The early 2021, when your dollar bought around 9 to 10 lira. If you go back to that sort of time period, what did we see? Well, there's a few things that really gave this trade away, and I'm still in the majority of the position to date. Is as I say, the deposits and the recent introduction that we saw for so-called tax incentives for the corporates. And there was a regime that came out where corporates could switch their currency deposits. And Turkey has been trying to reverse the de-dollarization. It's been a brave move and it hasn't worked. If anything, it's made the currency weaker. The real question is, how will this support the lira in the near term, and will we get a turnaround and some stability in the currency when we get the so-called true value? I do think we will in due time. And what about the strengthening tenor for lira deposit funding? When you look at some of the deposits, essentially they're now getting, comped as if the exchange rate depreciation on new holdings exceeds interest rates and the government covers the cost. And non-residents, so foreign investors, can take part in this, but it hasn't really had any effect on the credit profiles for some of the Turkish banks. If this does grow and becomes more popular, it will lead to large, what we call de-dollarization moves for deposits. And you could see some of the Turkish banks improving, which will give you some stability in the currency from a liquidity point of view. But we're not at that point yet. So very interesting to see. Domestic confidence is at all-time lows. You've got extremely high levels of inflation, negative real rates with inflation hitting 20-year highs. Until this can settle, you have to remain long dollar lira until we could see some light at the end of the tunnel. So it's very interesting times. And we had a bit of a surge at the back end of December last year, then going into January this year, the run up again, as we began our move to break out of that 20 level. Since then, we've lost another 40%, give or take, which is insane. These levels are not being talked about by anyone, really. So it's a really interesting market that is largely untouched. So lots to be looking at. Even this consolidation now, you can actually see we're beginning to slowly consolidate The daily swings are getting smaller in terms of the volume as well. So lots to be looking at. And of course, we've had some of the import figures recently that have came out. But even if we go back to, again, the start of 2021, when this rally came out, that was the real turning point for the import figures coming out of Turkey. We saw them grow by about 30% versus the 2020 time period. And they were reaching record levels of about 30 billion at the end of 2021. But that was really due to large purchases of intermediate, goods and things like this, capital goods. The only sector that fell in that time period was imports of consumption goods. And that was probably due to, obviously, the big drops we've seen in nominal wage growth, rising costs to household energy bills, which I've talked about in the past. And the government are subsidising household energy bills with grants that are coming out, which is, the recent move and the loans into the geothermal energy sector will be key for slowing down the extreme spending that Turkey are doing at the minute and the current account spending. All of this we've managed to navigate successfully via our current shorts on the Turkish Lira, and a lot of hedges long across the entire energy spectrum. So it'll be very interesting to watch this towards the end of next year. And what we can see going into 2024 is perhaps some final stability in the lira. And you have to look at pass-through rates as well. So exchange rate depreciation to the domestic prices. It's always an important factor for trying to determine inflation in Turkey. And then you've got to look at, the sizable share of their imports for their domestic market and their consumption. And it's gone too far now. So if you're looking at, short-term exchange rate, the pass-throughs on the domestic prices, they've been trading at 15 to 20% in recent years. So if you saw a 10% fall in the rated exchange rate of the lira, that would add 2 to 3 percentage points to inflation for every 2-month time period. And now that you've got inflation can be well over 50%, it's on the cards. So keep an eye on that. And this is partly why the lira is doing so badly. Also, unfortunately, Turkey, a bit like Japan, does not have many natural resources. They rely on imports for their natural resources. They have very little in the way, barely enough to make up 10% of their domestic demand. And obviously, as the commodity market has gone through the roof for various commodities really across the board from late 2020 up until the end of last year, it's affected those nations that are either net importers or net exporters. Turkey, being a net importer, has been hit really hard. So we're waiting for this stability. It's very rare that you get currency trades that are more treated like an investment, where you can actually swap physical dollars or physical lira, vice versa. So keep an eye on this pair. It moves fast, but this trend has been going since 2014, and it's only been sped up since really early 2021.